When interest rates turn south, the stock market turns north. But there are points in history when absolutely nothing goes the way it should. The markets react wildly and the cracks turn into chasms. We are at the precipice, so hang on tight. You came here for the truth. Today we are going to look at the 19 countries that have negative interest rates. I'll connect that in with a few other points, a few other charts. Let's begin. This is the chart we're looking at, where you can see Switzerland, Germany, and Italy, and others all having negative rates on their debt. Now, what is the striking similarity with these countries? Europe is the common denominator. This is a Euro-viral contagion. They are getting worse and worse. And a country like, let's say, Slovenia, Slovakia are selling their debt at negative rates when a country like Germany is also doing the same. So it's not just one or the other, the weaker countries or the stronger countries. It is contagion. They all have to do it. But have no fear, because the central banks will be there to save the day. That's right. Take a look at this here. You know that Draghi has been implementing his policies. You know that Kuroda has been doing so in Japan. You know that Yellen is sitting there ready and waiting to flip the switch. The ECB Balance Sheet has gone into astronomical levels. This is very important to note because the fact, first of all, hitting nearly $5 trillion, but you're also not thinking about it as this is a global system and all of the central banks work together. There's not one or the other. There is hundreds of billions of dollars being printed every single month put into the system, and it doesn't necessarily have to go in one direction right away. It can make its way around, and it might take a few years before that inflation is felt, but you can see what is happening. There was a lot of stagnation after QE3 ended, but it picked up after. And why? You can see the central banks, actually the total amount of money printed is higher than ever. And this goes to show you that there is a devaluation of currencies worldwide. They work together. That's the important part that I wanted to make. While interest rates are at such low levels, I mean, to think that you would invest in a product that you knew would give you less on the way back. Usually people go for that junk bonds and they go for all of these more risky type investments, derivatives and everything else, because they can get more yield. Well, in this case, you're willing to actually accept a negative return on your money. That's when you know things are topsy-turvy, that everything is upside down. This is a complete joke. You remember Cyprus. Well, according to this, the Bank of Cyprus posted a big loss on bad debt provisions. Look at this. Remember back in 2013, Cyprus clinched a $10 billion loan from the European Union and the IMF, everyone loves them, to bail out its troubled economy and oversized banking system. So what happened there? I covered it here and I was ridiculed, even though it is a fact, that 47.5% haircut on deposits above 100,000 euros at the Bank of Cyprus. People lost money. That's a fact. Half of their wealth above 100,000, saying, you have too much money, now give it to everyone else. But instead of giving it to everyone else, they end up just, of course, taking that to revitalize their own bank, even though they're the ones who were the problem in the first place. The bank has since undergone a major restructuring, with included absorbing the good assets from their former bank and selling assets, underlining its comeback. The bank listed on the London Stock Exchange in January. This is a disaster waiting to happen. You can see what's going on with all the debt. It's all going downhill and nobody's really wanting to talk about it. And it's really showing me how the mainstream media is able to work together with them to make sure that it all goes ahead as planned. Denmark. I'm always getting people from Denmark telling me that they want more information. So hello to all my friends in Denmark. The government proposed a broad range of, can you believe it, tax cuts that will hit all income groups, making it cheaper to save towards retirement and reduced levies on cars. This, at least on the surface, seems like it's an excellent thing. I think it's great. Whenever there are tax cuts, to me, that's a good thing. Of course, then if they need to make their money back from somewhere, they end up raising taxes somewhere else. That's what worries me, and I believe this could happen here. But if there are overall reduced taxes, I'm all for that. I think that that is a good thing because people want to be able to keep the money that they earn. Why not? If you want to have taxes on consumption, that's one thing. But if you want to have your taxes based on someone's income, someone's property taxes, I think that that is just, it's a terrible thing. Well, there's more in here. Essentially, they're trying to impose this. We'll see if it goes through. And I wish all those in Denmark to be very successful and hope for the best for them. Some regions of the world are just taxed so heavily, and I know that for a fact because I'm in Canada and the taxes are so high. It's a very big burden. Global emerging market debt total return and the G3 central bank balance sheet have been in complete correlation. In fact, I've seen this with other things where this G3 central bank balance sheet is directly correlated to so many different things, and I cover it here on the channel, of course. And it goes back to what I always say all the time. If central banks are willing to print money, you can continue this fraud. But what we have are things that become a little more uncontrollable. I say that with caution because as they become uncontrollable, the central bank can get in and simply print more money and bring the interest rates down. They have these mechanisms, but things will get worse, and then they print even more money, and then things get worse, and then they put more money, and so on and so forth. That's what happens historically. We'll see how it all unfolds. We're just in the middle of it today. Turning over to the emerging markets, China manufacturing PMI hits a, looks like 1 year low at this time. I don't know if it's going to turn around in an instant. That happens. It does happen occasionally, but at this time anyway, we can see that it is significantly lower than where it was just a few months ago. So we'll see where that all turns out. That's it for this video. If you found it informative, please give me a thumbs up. Support me in any way you can. Just give me a thumbs up. Just subscribe to the channel. Comment down below. I'll reply to you. These are things that help me very much. I know that a lot of people have said that they've been watching the ads, even though they might want to hit that skip button. And I do appreciate that very much because, of course, that allows the, when there are ads anyway, for it to come through, and I appreciate that. Thank you very much. Thank you to all those on Patreon. Thank you to all those through PayPal, Bitcoin, Dash, and all the other cryptos. Thank you to every single one out there who supports me. I appreciate it very much. If you found this video informative, I know you will find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. You can flip through these books if you're interested. The links are in the description below. Take care.